So in this video, we're going to be talking about how you can actually save $1,000 or more when it comes to your new auto loan. And so we're going to get into a couple different things here today, but make sure you stick around so that way you can find out how you can actually save over $1,000, probably even more money when it comes to your auto loan. Hey fellow wealth builders, Dennis here from the TruFinancials channel, where we talk about personal finance to help you build your wealth and become more financially free. And of course, I want to take you on this journey of financial independence, so make sure you hit that subscribe button down below and the bell to get notifications when new videos come up. All right, so I've done a couple of these type of videos before where I actually showcase what $100 can really do to your loan when it comes to anything that you have, whether it's student loan or a house loan, and the impact it can really have. Now, before we get into this and really showcase everything, for anybody that goes into the comments and tells me that, hey, you can invest this money instead of, paying off loans or whatever the case may be, there's a couple things you want to take into consideration. First, everybody has a different form of how they want to utilize their money or how they want to invest, if they want to pay off a car versus investing itself. Plus, this is typically going to be about $100 in a sense where it's not the most in the world for a lot of people. Hopefully, it's not in that case. And I think it can really have a big impact to be able to then later on down the road to actually invest more for yourself and be kind of more in a better situation. Now, if you follow along with this channel, you might already know that I'm not like the biggest fan of buying brand new cars just because the value does go down. I actually made a video a little while ago talking about the depreciation of the car's value, and I'll have that linked up here as well. So if you want to check that out, I'll also have it in the show notes down below. So what we're going to do is we're actually going to go here onto the computer. Now on here for the computer, you're going to see, I brought up this website. It's on valuepenguin.com, where it actually shows the average rate by FICO score for a 60-month loan on a new car. Now, as you can see, the lower your credit score, the higher interest that you're going to have to pay. So it actually hurts you to have a bad credit score. So the better credit score you have, the less you're going to have to pay in interest. So it's really unfortunate the way that works, but of course that's how it goes. So what we're going to actually do is we're going to kind of go somewhat in the middle. We're going to go for 660 score through 689 score, which is an interest rate of 7.02% on a car loan. Now, I also I just Googled it, or Binged it actually, on the average car note. And right now it's sitting at over $34,000 for a brand new car in 2019. So, obviously as time goes on, it's going to increase in cost to be able to have a new car. So I am here at bankrate.com. So if you want to utilize this calculator, you can go to the website as well. Again, bankrate.com. And so they have a section here where you can actually plug in these numbers. So I already have it all set up. So I did number of months remaining, so 60 months, as if you bought this car brand new. We did the loan itself for the whole loan is 60 months, and then the auto loan amount is $34,000. As I mentioned, that is the average here starting in 2019. And then the additional amount that you want to put every single month, like I said, I like doing $100 because $100 is not too hard to be able to earn throughout a month if you wanted to have this kind of impact, or whatever the case may be. But when we go look at the annual interest rate, I put it at that 7.02%. So that makes it an average monthly cost of $673.56. That's a lot of money to pay for something every single month. Now, one of the other reasons I'm not a big fan, as I mentioned earlier, was the fact that cars go down in value. So a lot of times when people drive off the lots with a car, they end up already getting underwater on the car. And being underwater can be very difficult because then all of a sudden, if you need to sell it, whatever the case may be, it can make it so difficult because you might have to still owe money on it. So when we plug all these numbers in, we hit calculate and view report. So what it's going to do, it's going to bring up this information here. So again, the loan term is 60 months. The remaining is 60. So if you got it, that day, and then you start impacting it by having an additional $100 go towards the principal, because that is very important, as I mentioned in other videos as well. Making sure that the money goes towards the principal is important. You'll see here that the current payment, like I mentioned, was $673.56 per month, but then you had to do an additional $100 on top of that, so it'd be $773.56 each month. And then doing so would actually lower your loan amount by 9 months and actually save you right around $1,000. So it's $996.03. Now, I know to some people 9 months might not seem like a long time to cut off from a 5-year loan, and having to put $100 every single month seems like it's not going to save a lot, but saving $1,000 for the course of the car loan off of interest is going to be huge. Plus, the way I like to see it is the fact that once you have this car loan gone, you're not going to have that $673 a month payment that you had to pay, which means that you open up the cash flow to be able to have that money used for something else, whether it's investing, whether it's putting it towards something else that you want in your future, saving it up for an emergency fund, whatever the case may be. That is huge cash flow for you if that happens to be the case of how much you pay on that loan. Now, of course, you might have a different loan term. You maybe have a shorter loan term or a longer loan term. Maybe your interest is higher, maybe your interest is lower. But nonetheless, if you're putting extra towards the principal on any type of loan, cars, student loans, homes, you're going to see this type of impact where you actually are lowering the amount of time that you have to pay on that loan, and then the amount that you actually have to pay in interest, which I personally don't like paying things on interest, because that means I am paying somebody else because I wasn't patient enough to be able to wait to buy those things with cash, or just having it saved up and ready to go. So that's just one way to look at it and help you save over $1,000 when it comes to your brand new car loan. Again, if you wanted to go in here, you can hit hide report and actually re-plug in these numbers. So based off of where you are sitting at right now, maybe you've had your loan for already 10 months, so you could do remaining months is 50. You could do whatever the current loan is, and then the amount that you want to put in every single month. And I think that can really help out to be able to have a huge impact for your future. Not only to save interest, because again, that's a great thing, but then also to have that type of cash flow. Like imagine if you had, whatever your car loan is right now. So let's say it's that $600, let's say it's even $300 a month. Imagine having that cash flow to be able to do other things with that money. Again, whether it's saving it, investing it, spending it on, going traveling, whatever the case may be, but not having to pay somebody back for something that you could have potentially waited for. Obviously, it depends on each person individually and what their situations were for, getting a brand new car in that regard. So I hope that actually helped you out, get you an idea of what it's like to actually put in an additional $100 every single month towards your auto loan, and potentially save you $1,000, if not more, maybe even a little bit less, but still save you money, and then cut off the time that you actually have to pay for that loan. So I really hope you got some value out of this video. If you did, make sure you hit that like button, and then you can comment in the comment section down below, letting me know if you've ever had to pay extra towards your car, so that way you can cut down the time that you had to pay on the loan. I did that when I first originally got a brand new car at the age of 18. I actually started paying extra towards it because I just was not a fan of having to pay interest and having over $350 going away every single month towards a car. So definitely like to hear from you in the community, in the comments down below. And if you want to keep on learning here on this channel, I have some additional videos for you to continue watching right over here.